Welcome to the very first episode of the Iron and Dirt podcast. I'm David. I run a multi-store farm equipment dealership, and I spend most of my days juggling floor plan interest, angry bankers, and even angrier customers. I've been in iron my whole life, started as a salesman on the lot, and worked my way up to dealer principal. I'm proud to kick this thing off and talk honestly about where this market is really heading.
I'm Mike. I farm corn and soybeans here in the Midwest. Fourth generation on this ground, and these days I manage more acres, more risk, and a lot more technology than my dad or grandpa ever saw. My world is margins, uptime, and whether the banker still picks up the phone. I'm glad to be on the first Iron and Dirt podcast because somebody has to say out loud what's actually happening on the farm side.
I'm Sarah. I work as a strategy lead for a global agricultural equipment manufacturer. My job is to think in product cycles, factories, and global supply chains, how we invest in automation, connectivity, and parts distribution for the next decade. I know I'm the corporate voice at this table, but I'm here because these conversations matter. I'm proud to be part of the first Iron and Dirt podcast, and I'm ready to take the tough questions.
All right, let's cut the pleasantries. I looked at my lot this morning. I am sitting on $6 million of used inventory that is depreciating faster than I can pay the interest on it. Mike, you're not buying. Sarah, your company keeps shipping me allocations I didn't ask for. Who is going to blink first in 2026?
I'm not blinking, David. I'm clamping my wallet shut. Look, corn is hovering at break-even for me. You guys want $700,000 for a combine that does effectively the same job as the 2019 model I'm running now. Why would I buy new when the trade-in value you're offering me for my old unit is insulted?
Mike, that's an unfair characterization. The 2026 platform isn't the same. You're ignoring the automation stack. We're talking about 15% efficiency gains in grain loss and fuel economy. If you're looking at sticker price, you're looking at the past. We are selling you yield, not just iron.
You're selling me a monthly subscription, Sarah. That's what you're doing. You're selling me a receiver I have to unlock every year.
Hold on, let's stay on the metal for a second. Sarah, Mike has a point on the valuation. The OEMs pushed price increases of nearly 40% over the last 4 years. Now that commodity prices have cooled, you guys are still pricing equipment like corn is $7. I can't move new units because the farmers can't cash flow them.
We have raw material costs, David. Steel, energy, labor. Inflation hit manufacturing harder than it hit the farm gate. We can't drop the price without cutting research and development. And if we cut research and development, Mike complains that he can't find labor and needs autonomous tractors. You can't have it both ways. You want robots because you can't find hired hands, but you don't want to pay for the robotics development.
I want robots that work, Sarah. I don't want a beta test in my field, and I definitely don't want a tractor that shuts down because a sensor failed and I'm not allowed to bypass it.
Okay, here we go. The right to repair argument.
It's not about allowing you to bypass it. It's about safety and emissions. If we let you hack the ECU to bypass a DEF sensor or torque limiter and that machine hurts someone or violates EPA standards, we get sued, not you.
That's a lie, Sarah. Respectfully, that is a lie.
Excuse me?
It's a convenient lie. You don't lock the ECU for safety. You lock it to protect the parts margin for David here. You lock it so that when a $50 sensor breaks, I can't plug in a laptop and clear the code to finish my harvest. I have to wait 3 days for one of David's techs to come out with a laptop that has the magic key. That 3 days of downtime cost me $20,000. Safety is the shield you hide behind to protect after-sales revenue.
Whoa, hold on. Don't pin that on me. I want you running, Mike. My techs are booked out 2 weeks. I don't want them driving out to your farm to reset a code. I lose money on those warranty calls.
Mike, if we open up the full architecture, you know what happens? The secondary market gets flooded with tuned tractors that blow their transmissions at 2,000 hours. Then you trade that blown-up tractor in to David. David sells it to another farmer, it dies in a week, and the brand reputation is ruined. We are protecting the residual value of the fleet.
My residual value is already tanking because nobody can afford to fix the new stuff. I'm seeing guys at auction buying 15-year-old tractors for more money than 5-year-old ones because they don't have the DEF systems and the proprietary software locks. The market is telling you that your technology is a liability, not an asset.
He's right about that, Sarah. The hottest thing on my lot is a 2012 model with low hours. The 2024 models are sitting. The strategy for North America has to change. We can't keep pushing higher tech if the support infrastructure and the farmers' trust isn't there.
So, what is the solution? We stop innovating? We go back to levers and pulleys? The rest of the world, Brazil, Eastern Europe, they are adopting autonomy. If North America resists, you will lose your competitive cost per bushel advantage.
The solution is the retrofit. Stop trying to sell me a whole new $800,000 rig. Sell me the autonomy kit I can bolt onto my existing tractor, but you won't do that because it kills your factory volume.
We are doing that. We have retrofit kits available.
Let me call the foul there, Sarah. You technically have them, but your incentives are built to force me to sell new iron. If I sell a retrofit kit, I get a pat on the back. If I sell a new Fendt or Deere, I get my volume bonus. The OEM compensation structure forces dealers to push new iron over retrofitting. That's the dirty secret, but that's the problem with the 2026 forecast. We need to talk about the warehouse. Sarah, your team sent out a memo last week celebrating a 98% fill rate on parts distribution.
That's a verified metric, David. Across our North American master depots, 98% of orders are filled within 24 hours.
Oh, here we go.
Hold on, Mike. Sarah, that metric is, and I say this with love, total garbage. You're measuring fill rate based on what you decide to stock in the master depot. You aren't measuring the lost sales at my counter. When Mike comes in needing a specific hydraulic sensor for a combine header and I don't have it and you don't have it, that doesn't show up on your report as a miss. It just shows up as me getting screamed at.
Exactly. You guys play games with the numbers. 98% fill rate usually means you have plenty of filters and oil plugs, the low value stuff. But when a main controller board fries, or a specific wiring harness for the new Tier 4 engine, back ordered. Estimated delivery, 6 weeks.
Okay, stop. That's an exaggeration. The supply chain has stabilized since 2022. But Mike, you have to understand the manufacturing reality. We are moving toward a global inventory model. We are trying to balance the North American harvest with the South American planting season. We can't have millions of dollars of slow-moving parts sitting on David's shelf collecting dust. That's inefficient cap.
Inefficient capital. Sarah, when my combine is down during harvest, I am losing $4,000 an hour. That is my capital bleeding out. You guys are obsessed with just-in-time inventory because it looks good on your balance sheet. You push the risk to me. You want me to wait so you don't have to hold stock.
It's not about avoiding stock. It's about predictive stocking. Our new telematics systems tell us when a part is about to fail. We want to ship the part to David before Mike even knows he needs it.
And that's the other lie, the predictive lie. Sarah, your algorithm is aggressive. You are auto-shipping me parts I didn't order. I am paying interest, 7% floor plan interest, on parts your computer thinks I need. I'm sitting on $200,000 of predictive inventory that hasn't moved in 6 months. Meanwhile, I can't get the one gasket Mike actually needs.
So what is the alternative, David? Do you want to go back to the 1990s where you stocked everything and went bankrupt?
I want safety stock to stop being a dirty word.
I'll tell you what I see. I see North America getting the short end of the stick. It's not a logistics optimization, Sarah. It's theft. I'm hearing from guys in Nebraska who track the shipping manifests. We know you're diverting high-wear items, concaves, rasp bars, turbo actuators, straight to the port of Santos. You're starving the North American market to feed Brazil.
Mike, that is a gross oversimplification of global supply chain management. We don't starve anyone, but look at the data. A combine in Mato Grosso runs 2 harvests a year, soybeans and safrinha corn. They are putting 800 to 1,000 separator hours on a machine annually. You, in Illinois, are putting on maybe 250.
And there it is. She just said the quiet part out loud. And
It's not quiet, David. It's engineering logic. If a machine in Brazil goes down, it is effectively down for double the economic impact because their window is tighter and their usage is higher. The global allocation algorithm prioritizes the region with the highest immediate machine down severity. Right now, that's often South America.
So because I take better care of my equipment and run it fewer hours, I get penalized? I paid the same $900,000 for the combine as the Brazilian guy. Actually, I probably paid more because of the Tier 4 emissions crap you force on us that they don't always have to deal with.
that's a huge point, Sarah. The North American farmer is subsidizing the research and development for the whole world. We pay the premium for the clean engines, but when the turbo blows on that clean engine, the replacement part is on a boat to Parana because their utilization rate triggered a critical stocking alert.
We have separate stock pools. We don't just raid the Illinois warehouse to ship to Brazil.
Then explain the gray market I'm seeing. I have brokers calling me offering to sell me my own OEM parts that they imported back from Brazil. They're buying them down there where you have plenty of stock and shipping them up here to sell to me at a 30% markup. If the stock pools are separate, why is the black market bridging them?
Exactly. I bought a wiring harness off eBay last month to fix my planter. It came in a box with Portuguese labeling. Explain that, Sarah.
Look, the Brazilian market is volatile. Yes, they have high utilization, but they also have massive tariff barriers. We have to manufacture parts locally in Brazil for Brazil to avoid the import taxes. If you're seeing Portuguese boxes in Illinois, that's arbitrage. That's not OEM policy. That's independent brokers exploiting currency exchange rates.
I don't care if it's arbitrage or policy. I care that I can't get a part from my local dealer, but I can get it from a guy in Sao Paulo if I wire him cash. It tells me the system is broken. You've built a system that works for shareholders, not for the guys growing the corn.
And here's the kicker, Sarah. You want me to compete with that gray market? Then give me consignment stock.
We've discussed this, David. Consignment is a balance sheet nightmare for us.
And holding the bag is a nightmare for me. If you want to stop Mike from buying gray market Brazilian parts, then flood my warehouse with inventory on your dime. Let me hold the stock interest-free until I scan it out the door. That stops the scarcity panic. But you won't do that, will you?
It comes back to efficiency, David.
No, it comes back to the tsunami. Look, we can argue about parts all day, but we are ignoring the elephant in the room. Actually, it's not an elephant, it's a tsunami, and it's making landfall in roughly 4 months.
You're being dramatic again, David.
Am I? Let's look at the numbers. 2022 and 2023 were record sales years for high horsepower tractors. Why? Because commodity prices were high and farmers had cash. But they didn't buy them, Sarah. They leased them.
I leased my four-wheel drive. It made sense for the tax write-off.
Exactly. You and everyone else. And the standard lease term is what? 36 months. Do the math. The leases written in the boom of 2022 and 2023 are all maturing right now.
That is a standard replacement cycle. We model for this.
You model for a normal market. You don't model for a market where interest rates are 7% and corn is $4. Mike is about to drive his 2022 Steiger back to my lot and drop the keys on my desk. He's not going to buy it out because the residual value is set at $400,000 and the market value is now $320,000. He'd be crazy to keep it.
He's right. I already looked at the buyout. I'm walking away from that tractor. It's your problem now, David.
See, it's your problem now. Multiply Mike by 500 customers. I am about to have $50 million of off-lease inventory dumped on my lot in Q1 of 2026. I can't sell it. I can't export it. Europe is slow, and Brazil has their own manufacturing now. This is the used equipment bubble.
David, the certified pre-owned program is designed to move those units. We offer warranty extensions.
A warranty extension? Sarah, I need interest rate subvention. I need you to offer 0% financing on used equipment. That is the only way this iron moves, but you won't do that, will you?
Subsidizing used rates cannibalizes new sales. If we make the used tractor too attractive, nobody buys the 2026 model. We have a factory to feed.
And there is the truth. You'd rather let the dealer drown in used inventory than risk slowing down the assembly line.
Which means my only option is to crash the market. I have to liquidate. I'm going to send 20 combines to auction next month with no reserve.
Wait, don't do that.
Why not? I need the cash.
Because if you dump 20 combines at auction for cheap, you just reset the market value for my equipment. My balance sheet is based on my machinery equity. If you crash the values, my bank calls me and says my collateral just evaporated. You'll bankrupt us both.
This is fear-mongering. The market will correct.
No, Sarah. For once, David isn't lying. This is a standoff. The dealer is full, the farmer is broke, and the manufacturer is still shipping new units like nothing is happening. Something is going to break.
It's not going to break, Mike. It just snapped.